Good evening, VV Nation. My name is Ryan. Welcome to the channel. Welcome to tonight's presentation. Now, I try to keep you on the right side of the market every time I make one of these videos. Now, something interesting I'm seeing this morning. I know we've all saw the CPI report. Put in the comments section what you thought of this morning's CPI report. Put a 1 if you thought it was good. Put a 2 if you thought it was bad. Now, me personally, I actually thought it was phenomenal. I'm going to show you exactly why I thought that. I know the market's not, really reacting positive right now. All the major indices are down right now. I'm recording this about 10 o'clock, 30 minutes after the market opened. Now, that being said, the only thing I see in positive territory right now, as far as index, is the Dow Jones. It's up about, let's see here, about 40 points at the moment. Now, in tonight's presentation, we're going to break down tonight's CPI report. On top of that, we're going to go to the stock viewer. There's one space in the market in particular where I'm still actually seeing some momentum to the upside. These stocks, still up as of right now. So I wanted to put these on your radar going forward. So let's go ahead and get started. Now, here's something I found very interesting. Here's an article from CNBC on the CPI report. Now, this states that a 0.4 increase in shelter costs, that's right, shelter costs was responsible for 90% of all items inflation increase. Food prices increased 0.2% while energy was flat. So you can see what the problem is still when it comes to inflation, and that is the cost of housing. Now, right after the CPI data, I found this article, mortgage refinancing surges 35%. When I saw this initially, I got pretty excited, but when I got to the details about it, yes, the refinancing did go up over 35%, mostly because interest rates have dropped. Because look at the demand here. If you take a look, applications for mortgage to purchases home rose 3% for the week. Not bad, but guess what? Still down 8% lower than it was a year ago. So you can see that the housing market starting to slow, at least over the last 12 months here, putting a little bit of ease on pressure when it comes to shelter costs. Now, this problem is far from over, so let's jump into the VectorVest 7 system and actually take a historical look at the CPI data. Now, I know the markets may not be partying too much this morning because of the CPI report, but what I see here, look at this. Since May 7th, 2021, that was the last report that we had with CPI data less than 3%. Today's report brings it below this red line here. If you've been watching these videos, I did a video on the CPI data, last CPI report last month. I got a lot of good feedback, so I wanted to do it this time here. You can see for the last 12 months, since last July really, we see CPI data dropping off a cliff. However, back then on July 14th, the report finally brought us at 3%. That was the lowest report we've had. And since then, the popular term being used is sticky. We see CPI data staying between this channel here about 3.6% down to about 3% here. Now, last month I did say if CPI stayed within this channel here, I could see higher for longer as far as interest rate concerns. If CPI data was to go above this channel here, above 3.6%, I could see another, interest rate or at least potential for interest rate hike in the market. But the situation we have right now, CPI just broke out to the downside. The data hasn't been updated yet. It'll come out this morning. You can see it's still sitting at last month's 3%. But with the data this morning, that'll bring us just below this marker here. So me personally, I would think that this data would give the Federal Reserve at least some more ammunition to potentially cutting interest rates next month. Now that the CPI data has been discussed, now let's talk about some buying opportunities. That's right, I've got some fish for you here. Last week I did a video, you can see here, feeling bullish. This was last Wednesday's video, and I had some stocks for you. Now here's the fish I had for you last week. I did a quick test with them. 5 winners, 1 loser. Progressive at the top of the list here, 7.33%. Now PSIX, that was the big loser last week, down 11%. Hopefully you had a plan in place if you did get in this position. Now that being said, PSIX did have the lowest relative safety rating in the list here, along with that, the lowest CI rating. Now with this information in hand, where I'm going to focus on is going to be Progressive. If you've been to the viewers tab recently on the VectorVest software, you see Heritage Insurance along with Progressive. I mean, 2 out of the top VST stocks. I mean, we're tracking over 9,000 stocks, and 2 of those stocks are in the insurance field. So let's take a look at insurance stocks this week. All right, VectorVest, let's get excited here. I've got 5, that's right, 5 insurance stocks. Now, all of these stocks are in the same industry, and that's going to be casualty and property. Now, you can see all of these stocks are up today. Once again, Progressive here, PGR up almost 5%, 4.08. You can see it's a phenomenal stock here, a lot of momentum to the upside. Along with that, Allstate as well, 4.82%. Now, the reason why I chose these stocks here, Now, I know there's already been some momentum and some of these stocks have already moved to the upside, so I wanted to still find some value in the space. All 5 of these stocks are undervalued right now. We can see Berkeley currently trading $57. We value it at $77. Progressive trading at $231. We value it over $300. Hamilton just above $18 currently. We value it at $32. Allstate, $180. We're valuing at $241. Arch Capital just hit above $100. Right now, we're valuing at almost 150. So you can see a lot of value when it comes to these stocks here. And we look at the fundamentals, relative value, relative safety. Again, RV is not the same thing as value. It looks at long-term price appreciation. So if you're a longer-term investor, these stocks definitely should be on your radar. Phenomenal ratings here. I mean, the lowest rating on the list is 1.47. As far as safety, all of these stocks have a RS above 1, except Hamilton Insurance at 0.86. Now, the only reason why I let this one still on the list here is because everything else looks good. It's got a buy rating. The CI obviously weak, so clearly the company's been beaten up. But look at the sales growth rate and look at the growth rate earnings. It's the highest in the list here. 57% for sales, 49% for the earnings growth rate. So you can see why I put it in the list here. Just put it on your radar, but just know with the RS below 1, this is going to be the riskier pick in the group. Now, as far as looking at the trends here, RT relative timing, all of these stocks are making money. They're on an uptrend right now. 4 out of the 5 stocks have buy ratings. And if we go to the forecasted data, you saw it just a minute ago, double-digit ratings in both categories. So you can see why I want insurance stocks on your list today, especially with the market, pretty mixed right now. You can see why I wanted to put some of these insurance stocks on your radar. The major indices, taking a look, the SPX just went positive here. The NASDAQ still negative, so some volatility in the markets. But if you want to make some money and you got some time to trade here, these are some great positions, even for long-term investments. We see from a value standpoint here, these are great stocks, fundamentally strong, currently an uptrend, and the VectorVest 7 system is giving majority of these stocks buy ratings. Now, if you found tonight's video informative, both on the CPI data and some stocks to have on your radar here with insurance companies, make sure you hit that like button, subscribe to the channel if you're new here, and I will see you tomorrow night for Semiconductor Thursday.